Good morning, everybody. Welcome. It's a Tuesday morning, 9 a.m. How's everybody doing today? Hope you're all doing well, all your dads out there. Hope you had a good Father's Day over the weekend. I know mine was great. Spent some good time with the family. Plus, it was nice to have some time off with the COT data not being released. So that was a nice little break. No COT data was reported on Friday or released on Friday. So instead, it just came out yesterday, around 3:30. So we're going to examine that today because we're going to be able to extract a lot of information, especially from this last set of data. Okay, we're going to talk about why. All right, really important. So it's going to be a good one today. Really good one, so fasten your seatbelts and let's dive into this and see what we can find, shall we? How's everyone today? Good? Good to see you all. Thanks for joining again. So, Forex analysis, we're going to do some trade ideas, if there's any trade ideas, and the CFTC COT report for June 22nd, 2021 is going to be our focus today. All right, so let's dig in. The first thing I will do is I'm going to bring something up on my browser. Let's see. Let's type it up, bring it up. Let's see if I get the link. Because this is going to be interesting. You're gonna want to know this. This is important, okay? So I'm going to type in contract expirations. And let me see. Right here. Okay? I'm going to click on the bar chart. Futures, expirations, calendar. Okay? And now we'll wait until that loads up. There we go. It's loaded up. Okay, so on this website, this is where I personally go to find out where contracts expire, okay? Or when they expire, I should say. So what are contract expirations? Well, when you're dealing with futures, okay, contracts, they're contracts, right? And these contracts expire. So to find out when they expire, you have to come to this website here, all right? So you have to understand that when something expires, that means whoever is holding that contract, unless you want to take on that contract. So if you have a contract to own gold, if you continue to hold on to that contract when it expires, then technically you're supposed to be paid out in gold. All right, but I don't know if it's exactly like that. How it works like that. Because, I've been told different stories. So, but regardless, that's not what we're focused on. What we're focused on is the fact that when contracts expire, whoever holds those contracts, what they typically want to do is exit out of those contracts before they expire, right? Now, knowing this is a big thing. Why? Because you have to think about it, all right? We're following the big banks, okay? We're following the big players. And we're tracking what it is that they're doing with their positions. So if we know that contracts are coming close to expiring, then we know that they will want to exit out of those contracts. Okay? We know that. So if they want to exit out of those contracts, the question is, when they open up the new contracts, are they going to open up the same amount of positions as what they previously had? Or are they going to adjust those positions? Right? That's the key information that we want to grab from this. Okay? So I come here to this website, BarChart.com, and I look at the expirations. And this is for currencies, as you can see. The tab that has been selected on the top left-hand corner here is for currencies. So Every 3 months is when the major contracts end, and those are the ones that I'm focused on. Those are the ones that the banks are focused on, so those are the ones that I care about, okay? And they fall within June, September, December, and March. Now, if you look at June, you can see the dates that are there for the Canadian dollar, Japanese yen, the euro. I want you to take a look at those dates, right? 613, 614, 613, 613. So basically right before 615. Okay? That's important because this past data came out on 6/15, June 15th, okay? It was reported, I should say, reported on 6/15. June 15 is when it was reported. So what does that tell you? That tells you that the banks had positions which expired, and after they expired, they had to accumulate new contracts in the following for the next term. And so when the positions were reported on 6/15 of this month, it was reflecting the new amounts of long contracts and short contracts that they acquired. Okay? So this is the website that I go to. Once again, I'll point it out here, BarChart.com, Futures Expirations, Currencies. And then you can click and find out, energies, financials, grains, indices, metals, softs, and so forth, okay? But my focus is usually on the currencies, and then I look for the metals. Gold, and then I look for oil. Okay, but currencies is what I'm usually just focused on. All right, so now that we know when the contracts expired, we know when the data was released. It was released just yesterday, but we know that it was recorded on the 15th of the month. That's important. On the 15th of the month. Okay. So, once again, what that means is that their contracts expired before the 15th of the month, which means they had to exit out of their long or short contracts and then purchase long and short contracts for the next contract term, okay, which would be expiring in June, July, August, September. Okay, good stuff. So remember the big moves that we got last week, okay? Lots of big moves that we got in the last, let's say, it started June 11th? June 11th? Yeah, the previous week, and up until the 15th. Okay, so these big moves were taking place. Okay, so now we're going to look at the data. Okay, we're going to look at the hard data. We're going to look at the positions. We're going to see the difference between what the positions were that the banks opened up in the new contracts in relation to what they held previously. Now, here's the important thing that you're going to want to remember, all right, is because let's say the banks were ready to take price. Let's say they were ready to take the euro a lot higher, okay? Let's say they were ready to take the euro a lot higher. So if they had, let's say they had 100,000 long positions and they had 150,000 short positions. Okay? Let's just say that's what they had. This is long, and these are shorts. Now, if they were ready to take price up a lot higher than where price currently is now, what do you think they would do with their contracts? Okay? Remember, they have to exit out of 100,000 contracts, and they have to exit out of 150,000 shorts, and they have to replace this 100,000 with something, and they have to replace this 150,000 with something. So, would it make sense that maybe they would replace this 100K with maybe a little bit, potentially, right? 120K? And do you think maybe if they closed off 150,000 of their short positions, would they be eager to open up another 150,000 short positions in the new contract? Probably not, right? Because they don't have intentions to bring price higher. So maybe they're only looking to open up 70,000. So the thing is that after contracts expire, we would be able to come and see a massive difference over just 1 week. Okay, we would be able to see a big shift in positions because what the banks are doing is they're using this opportunity where the contracts expire. So they're basically forced to shift positions. They're forced to shift positions. So if they're about to do something big with price, then they're going to use this positions, the shift in positions to their benefit. Okay? They're going to use it to their benefit. So that's when we can come in and we can take a look at the positions and determine, is there anything here that we should be focused on? So I take a look at this here. Okay? I take a look at this information here. And what I can see, this page here, basically, it puts last week's information against this week's information. So if I use the difference here, okay, is what the banks were holding this past week, comparing what the non-commercials and the commercials, putting them together, taking into consideration that non-commercial is always trying to trade with price moving in a certain direction. Okay, they're speculating on whether price goes up or down. And commercials are typically hedging, so they're going against where price is going to go. If price is going to go up, they're shorting. If price is going to go down, they're going long. So what I do is I combine those two to give me a number. So the euro, extremely, extremely bullish at 300,000. Okay, that's very bullish. And then we got the US dollar Japanese yen, 112,000. Very bullish. And then we got the pound US dollar at 82,000. Very bullish. We got the US CAD at 117,000. Very bearish. And then Aussie, Swiss, dollars, not so much. But in the previous week, we had, okay, this is what we were looking at. Now we're going to focus our attention on this column here. On the previous week, we had the US dollar at a positive 7,600. So the shift has been very negative, from a positive 7,600 to a negative 808. We look at the euro, 289,000. It's been bullish up to 300,000. Pound, 72 to 82. US dollar Japanese yen, 91 to 112, and so forth. Okay, so we can see a big shift there, a big shift. And then to get more information, to get more in detail, we can actually go and click into each tab on the spreadsheet and take a look. So let's examine what we're seeing here, okay? Let's just zoom in and take a look at what we're seeing here. So I'm looking at the euro US dollar right now, okay? So remember, our focus here is to look at the CFTC data, taking into consideration the contracts that expired and examining what the institutions were doing with their positions. All right? So let's bring some focus here to June 8. June 8, they had long positions of 232,000. They had short positions of 124,000. Now, as they're approaching contract expiration, they decided to shift their long positions from 232,000 to 210,000. Okay? That's the shift that they made. They reduced their long positions from 232 to 210. Now, at the same time, they also reduced their short positions from 124,000 to 92,000. All right? The end result is that they used to have net positions of 107, and it jumped up massively to 118. Now, to put things into context, because we always want to put things into context, always, okay? Without putting things into context, you can't understand why they did what they did. And so if we can't understand why they did what they did, then how useful is the information to us? It won't be useful at all. All right, so now let's take a look at price. And let's just move this up here. Okay. So this was happening before June 15th. And June 15th is when we had price sitting right here on the daily chart. Okay, that's June 15th. Now, what did we have? We had a very big move to the downside. So they had this planned, this move. We saw this coming. We talked about it. We gave the reasons why, and the move took place. All right. So the move to the downside took place. So if price was going to move down, and you knew it was going to move down from 121 or $1.21 to $1.19, would you not want to close off some of your long positions, right? Especially if you had plans to accumulate long positions lower on the chart, or maybe even lower than where it is right now. If you had plans to do that, you would probably do that, right? Considering the fact that long positions we're at 232,000, okay? 232,000. Short positions were 124,000. So if price was going to drop, you'd probably want to take, reduce those long positions. Why? Because if you had plans to eventually push price back up past previous highs, you probably would want to start accumulating long positions lower, right? That's probably something you'd want to do. Now, if you knew price was going to drop and you wanted to take advantage of this drop, you'd probably want to close short positions at the highs as well, right? Before price goes lower? Probably. Okay. But think about it this way. Taking positions from 232,000 and closing long positions. When you add long positions, it causes price to go up. When you close long positions, it causes price to go down, which took place. But if you add short positions, it causes price to go down. If you close short positions, it causes prices to go up. So, in essence, if you're closing both longs and shorts, it helps to stabilize price. Okay? Which allows them to close long positions at a higher price. Now the drop happens, they don't care. They don't care about their shorts. They don't care about their long positions. They close the big portion of their long positions at the highs. If they want to start reaccumulating long positions at the lows, they will start doing that. And in terms of the shorts, they only got 92,000 right now. Okay? Yeah, they could have closed some more as price was dropping. That's very possible. And that would explain the very quick push to the downside. It's probably likely that they did. But that's not what our focus is on. Our focus is on trying to understand what took place here with their positions. So what I can tell you now is that they did close longs, they did close shorts, they did do them both at the same price. And the reason why they did both at the same time was to maintain price at a very stable area so that they can close off their long positions. Then eventually what took place is that price dropped very significantly. And we wouldn't know exactly why until we got the data next week to see that. Okay? But big drop in price. Big drop in price. And now we're here, down at these lows. So that's what took place. Euro reduced longs 232 to 210. That's big. Okay? So let's go and take a look at what they did with gold. Gold 288, no big move. The only thing they did was increase shorts from 75 to 79, but their contracts expire at different times. Okay? So the main focus here should be on the currencies. So we go to take a look at Aussie, and what do we see? We see that they decreased their longs and slightly increased their shorts. And Aussie did drop, right? So they took profits on long positions and they increased their shorts. That's what they did, okay? As we're contacting supply. Good place to take profits on long positions is always at supply zones. Okay? If you've been following us long enough, you'll know that the best place to take profits on long positions for banks are when price hits supply. So that's what they did. They took profits on long positions and they slightly increased their shorts. Okay, and what happens when you take when you take profits on long positions? It causes price to drop significantly. USCAD. Long positions have been greatly reduced over the last few days. And what have we been seeing with price? Okay, that big move to the upside, which we were anticipating, and it took place. And we had that great 15-minute long trade that we alerted everyone to. And so we look at the USCAD. They've been reducing their longs, 40, 35, and then 35 to 28. That's pretty significant. Look at the coloration of that 28 on my spreadsheet. It's blue. That means their long positions are very cooled off. Okay? Their long positions are very cooled off. And in the last 3 weeks, they took their shorts from 89, 80, 73, taking profits on short positions. Okay? I suspect that we're going to see more downside in the near future, but we'll wait and see. Moving over to the US Swiss franc, would we see anything special? Nah. They reduced their longs from 11 to 5 and increased their shorts from 12 to 14. Nothing really special. Pound, they reduced their longs from 59,000 to 55,000. And they also reduced their shorts from 31 to 23. Nothing spectacular there. US dollar, Japanese yen, they added to their longs from 64 to 69,000. And then they reduced their shorts from 27 to 22,000. Okay, let's take a quick look at the US dollar, Japanese yen. There you go, US dollar, Japanese yen. Let's put that into perspective here. There we go. There we go. So again, they were increasing their longs. We see price rallying up. Makes sense. And decreasing their shorts from 27 to 23. So they're not really focused on shorting right now. And shorts have been cooled off for quite some time. Right? So they haven't been focused on their shorts for quite some time. They have been focused on their longs. And that's why those positions have been greater. And that's why those positions have been somewhat in the red. More aggressive than short positions, that's for sure. All right. So what else do we got here? Kiwi. We see that they decreased their longs from 21 to 18 and slightly decreased their shorts. So decreasing longs, and I believe there was also that drop in price. Yeah, there was that drop in price. So they took profits on long positions, and they're not doing much with shorts. So across the board, profit taking on long positions. And this is exactly what we've been talking about. Okay? This is exactly what we've been talking about. We've talked about this numerous times over the live sessions that we've been doing, about the phase of the markets. You must understand the phases that the markets go through. And when the markets are going through a phase of profit taking, it's not the time to be getting involved. Right? If you want to get in long gold, the last time you want to ever get into a long gold position is when the profits are being taken on long positions by the banks. That's not when you want to get in, especially if they're not sustaining price at a level. You know, if they're going to start taking profits on long positions, price is going to drop, and it's going to drop hard. Okay, so that is what we're grabbing from this CFTC COT report. Okay, that's the information that we're grabbing from the report. Now, in terms of trade ideas, Trade ideas are going to be very, very difficult to locate at this time because, as you see, you're putting things into context. They're profit taking on long positions. Now, are they finished taking profits on long positions? Possibly. Are they going to continue? That's a possibility. I don't think it's very likely. Okay, just basing, my decision off of looking at the positions and looking at where the markets are at currently, I don't think it's going to continue. It's possible to, but I don't think it's going to continue. So if it doesn't continue, then logically, what we can start thinking about is the potential for them to start to add back into their positions to further push price in a certain direction. All right, so in terms of gold, I think there's a good chance, we spoke about this before, that we start seeing momentum building from this area and then start heading higher. There's a good chance, all right? But if I was to say, here's the charts, what do you think the chance that price is going to move up right from this spot right here? If I had to just give a number, I would say probably about a 60% chance, okay? Now, that's not good enough for me to trade. A lot of traders would trade off of a 60% chance, not me. I'm not interested in 60% chances. I'm interested in 75 into the 80s, 90s. That's what I'm looking for. So right now, would I want to get into a long position? No, it wouldn't be the most ideal time. So we're watching the charts for the signals that the institutions are buying again. And those will slowly come. We got to wait for that to happen. But as price does play out and the banks start to create the formations on the charts that are showing us that they want to continue price in a certain direction, then this number here, 60%, will start to increase to 70% and then slowly to 75%. And then the trade ideas will start to pop out. Okay? Right now is not a good time to be looking for trading ideas. All right, that's the honest truth. I mean, I'm sure there'll be lots of systems out there that will look at these charts right now and find trading opportunities, and that's great, but those are very low odds. I can tell you that right now, they're very low odds because of the whole context of where price is right now. There's nothing very solid to ensure that price is going to move in a certain direction. So we need to wait. Now's the waiting game. That's what I'm doing. Okay. So that's what I see for gold. Post your questions. Hit the like button if you haven't. I'd appreciate it. Hit the like button, and afterwards you can share the video. I would really appreciate that. So let's go quickly over just a couple more, and then I will let you go on with the rest of your day. So we see the Aussie has pulled back, and there's still room for it to drop. It's just on the verge of breaking through some institutional demand zones. And if that happens, price can drop even more so. So that leads me to suspect that the Aussie pairs might be weak, okay, in the coming weeks / potentially even longer than that, okay? And that's good because we do have a position on the Aussie CAD that would benefit from that. Aussie Japanese yen. We also see potential for a bigger move to the downside. So that makes sense with respect to the Aussie weakness. Aussie Kiwi, just ranging. Both of them are weak at this time. So let's go over to the Euro US dollar. So the Euro US dollar is sitting in an area that we can potentially see more of a drop in price. Okay, so this may not be it. It depends. I mean, if we start seeing supply areas, the institutional supply zones being removed, then we know that the banks are interested in taking price higher. But we're not seeing that right now. Okay, Euro Aussie. If there's strength in the euro and weakness in the Aussie, then we can see some weakness on the Euro Aussie. But the chart is very difficult. There's nothing very strong on the chart from what I'm seeing that would suggest that it's definitely going to go lower. In terms of the pound US dollar, we saw that initial move to the downside, and now it's breaking down through right here, the ascending trend line on the weekly chart. Okay. So that weekly uptrend is not looking so good right now. It's looking weaker, very weak. And if it does break, then there's nothing to really hold price up here. So I'd be very careful with going long any pound or pound pair. Okay, now we're going to go over to the Kiwi really quickly. It dropped and it's hitting an area of institutional demand. Right here, we talked about this many times, that price is stuck in a range. We need one of these areas to break to have clear direction. So we'll wait and see what happens with that, because that hasn't happened yet. A big increase in price, USCAD, which is great, and it can continue to head higher. It's definitely got a chart that it can move higher. Let me quickly move over to the dollar. I want to take a quick look at the dollar again. Yeah, the dollar can move higher as well. So there's a very good chance that we see a continuation of the move, of the moves that we saw begin. And US dollar Japanese yen is looking somewhat strong. So it can definitely go a little bit higher, even though we got that supply being contacted on the weekly chart. It could definitely go a little bit higher. Okay? And that's pretty much it, ladies and gents. Okay? That is pretty much it. So if you have any questions, let me know what they are. It shouldn't have to do with the CFTC COT report, since we just looked at it. And if you don't have any questions, that is great. I will leave you with that. And that's it. If you have any questions, you can always shoot me an email. And if not, then I hope you enjoyed today's session. And we will reconvene tomorrow at the same time, 9 o'clock in the morning. Okay? I'll just wait a little bit longer and see if you have any questions. And if you don't, then I will let you go. Okay? Hope you enjoyed today's session. And yeah, that's pretty much it. Okay? Hi Kevin, do you think US Swiss has a possibility to retrace, come down this week? If yes, then to where or which area? To come down. Do you think US Swiss has a possibility to retrace? To drop? Yeah, it's possible. It's possible, but remember, I think it's a little bit too early to suggest that, because what I'm seeing with the dollar is that it's got room to continue higher. So I wouldn't be focused on, if price is going to drop on the US Swiss, because the dollar is showing that it can definitely continue higher. Okay, so I wouldn't be focused on that personally. Okay, any other questions? If you do have any questions, when the session is over, you can leave your questions on the comments, and I will be sure to get to them. All right? Okay, that's it. I'll let you go. Thanks for joining me, and we will talk to you later. See you tomorrow. Quick look at the dollar again. Yeah, the dollar can move higher as well. So there's a very good chance that we see a continuation